Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. And today I thought it was time to focus on TTCF, the Tattoo Chef company. It's been a while since I made a video on them, so I thought it would be interesting to see, especially what we could expect for them in Q4 earnings, right? That's coming up now in about a month. But it would be also interesting to see what kind of stock price we could expect this year. Well, according to Wall Street analysts anyways. So guys, stay tuned. As always, I would truly appreciate an early thumbs up since it helps spread the video to more people out there. And if you want to keep getting updated on Tattoo Chef, Beyond Meat, the very good food company in Oatly to name a few, 5 days a week at the very least, then make sure to subscribe and don't forget that bell button. And if you're interested in being part of our free Discord channel, we're reaching 500 people soon, where we talk about the chef, we talk about Beyond Meat, Oatly, the very good food company. Then take a look in the description and join us. Let's start the conversation. Now, if we take a look at the stock price right now, TTCF and NASDAQ, we can see it's around $12.74. It's actually down about 1% today. And last 6 months, it's actually down 40%. It's been a really rough ride, as many of us know. Now, if you want to know more about what's going on in the market today, I've been talking about this in the former video that came out about half an hour ago. It has to do about the CPI data that came out that actually showed us that the consumer inflation is up higher than we thought. But I'm not going to waste time talking about that now, since this is actually what I just talked about in a former video. So let's just focus on the chef today. So first of all, what could we expect from the chef during their Q4 earnings? Will they beat expectations? Well, let's first take a look at their earnings from Q3, which we know they missed about by $5 million. Now, of course, there's a lot of reasons behind this. Bottlenecks, abroad, inflation, the overall pandemic. I also highlighted that Q3, that was during summer months, right? I mean, that's in July, August, and September, which means that most people are probably out eating at restaurants or on vacation. They're not going to focus on buying frozen meals, especially during that time when a lot more people have started taking the vaccines, right? So people felt at ease. And again, the freezers aren't what's going to be interesting. And also, let's not forget, even though they got their products at a lot more stores during that time, Kroger's, for instance, back in September, it is unlikely that we would see a lot from those sales in Q3. I mean, they barely begun selling, right? So a lot of reasons why they didn't meet expectations, and many really didn't during that period, several other companies. So what are the expectations for Q4? Well, it's even less, around $51 million. Now, will they be able to beat those earnings? Well, I dare not say or speculate too much because there's a reason why they actually lowered those expectations. And that is the Omicron, which actually started to show up its ugly face more and more during this autumn. But also, like Stephanie, the CFO, actually stated, it's the holiday seasons. And to me, that makes a lot of sense, considering that Q4, that's going to be October, November, and December. And what happens then? Well, there's a lot of holidays. There's a lot of celebrations, right? I mean, we have Halloween, we have Thanksgiving, we have Christmas, we have New Year's Eve. So most people, they're not going to focus on the idea of eating more healthy, right? Or eating more plant-based. That's when people actually goes to those traditional meaty animal products, right? Like turkey, for instance. That's the kind of food people want to eat during those times. And right now, as we know, the chef doesn't really have any substitutes for that. So to me, this could contribute to lower sales in Q4. Hopefully, they should, at the very least, be able to meet the expectations, and who knows, even beat it, bearing in mind that they have had their products for a longer period of time now in these new or not so new retailers. Pure speculation, just let's wait and see. Now, Q1 is more exciting in my eyes, right? I mean, that's January, February, and March. And that's when people make New Year's resolutions of eating more healthily, right? After just stuffing themselves for a month or two. So I think we could see some really interesting changes there, especially considering that something that's bigger now in the West is Veganuary, right? There are people thinking about eating more healthily. Now, by the way, folks, if you want to start using Seeking Alpha like I do and use their tools to strengthen your investing strategies, then take a look in the description. You get a 50% discount from me for 1 month, a year, or even longer. What I like is that you get a lot of analysis from different people, analysis and articles that you can't get access to anywhere else. But obviously I get a commission for every sale. I also want to add here is that people covering TTCF on Seeking Alpha used to have a warning signal here before, that they felt that this is a stock that is kind of terrible to own considering the valuation before, and they've actually removed that warning label. And I guess the reason is that they have dropped a lot in price, which makes them an even more safe investment. For instance, they still have a warning label on Beyond Meat. So what could we expect for the whole year? Well, it seems that the 3 analysts that covers this stock, they're have a unanimous idea, and that is that it should be around $213 million. So what kind of price target do actually these 3 Wall Street analysts have for the chef? Well, if we take a look here, we can see that one of them thinks it's a strong buy, one it's a buy, and one thinks it's a hold. And the average is actually at $21. So that's almost another $10 that it should go up. So about, I don't know, 80-90% upswing from where it's at right now. Now you might ask yourself, should we care what Wall Street analysts actually says about this company? I mean, we do know that a lot of analysts, they just usually go with the flow, right? If things are going bad in the market, then the stock goes down, then they'll start downgrading the company. If things is going good, they start upgrading, which is actually interesting here, isn't it? Because they're basically still saying it's $21, 3 of them. I mean, they could update it soon, but it's been there for a couple of months. So that's a good sign. But again, should we care what analysts think? No. You should care more about what you think and do your own due diligence, right? And you should be the expert on your own companies, right? But most people, retailers and institutions, cares what Wall Street thinks, right? What analysts think. So if they say something that is good for our companies, well, in the long term, that will benefit you as well. So will things turn around for the company? Will we see that stock price coming up? Will we see better revenue numbers? Well, sooner or later, I do expect us to do so, right? Considering now, as we know, that Fauci just stated, I talked about that in my former video, that we will soon learn to live with Rona. We know that the numbers are actually going down again, right? But this is going to be part of our reality. I mean, we've talked about this, we've seen this several times, right? So this is going to be part of our reality. We just have to live with it. So that basically means that people are going to start going out, buying more food again, right? And the economy, the overall economy is doing better, and it's probably going to keep doing better according to the Fed, which is a problem when it comes to interest rates, because then they feel that there's no problem. The market can handle actually raising those interest rates. But that means that people will have more money to buy more premium products, which is something we want to see, right? But I also wanted to leave you with another positive note here. And it is that when it comes to the share statistics here, and when it comes to the institutions, now I'm a bit concerned of who to trust actually, because if you go into the NASDAQ, it says that it's held by institutions about 16%. You go into Yahoo Finance, it's around 17%. And here on Seeking Alpha, it says that it's actually up to 23.35%. Now that is a huge increase if that is the case. Now, who are we to trust? Well, I would say that Seeking Alpha, since it's a paying service, right? You can see small parts for free. But if you want to have these kind of details, it's a paying service. So I would hope that they have the latest numbers. And this is true. If they're up to 23.35%, well, that is a really good sign for the company, right? And it's not very shocking considering that the valuations have gone down a lot, which makes the PS way more attractive, right? So not so surprising then if institutions are starting to buy into the company more and more, which is beneficial for all of us in the long term, for all of those who are actually invested in the company. All right, folks, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button and help me out. And again, guys, if you are interested in TTCF, Beyond Meat, Oatly, or the Very Good Food Company, to name a few, make sure to subscribe and don't forget that bell button, right? And feel free to join our free Discord channel where we talk about these companies. All right, guys, have a great day. And don't forget, this is not financial advice. These were just my own opinions. All right, see you tomorrow and peace out.